Hi everyone, welcome to the channel. Today we're going to be going over Starbucks. We're going to dive into the company. We're going to look at charts, some financial statements, and things like that from an investing perspective. I do like to clarify at the beginning that this is an investing perspective, not necessarily a trading perspective, so we're more looking at it for the 3 to 5 year outlook. So I know a lot of people are into trading as well, so hopefully you could learn something through this, but that's not necessarily what this is geared towards. So first thing I like to do when looking at a company, right? I like to look at the 1 year chart, the 5 year, and then the all time, just to make sure. Nothing sticks out in the all time really, but the 5 year, right? I'm sure this sticks out to most people as well. 10% is not ideal, and it's a little misleading, right? Because prior to that, if you took it, 2018, right? So that's 6 years, even something like 2019, and that's about the 5 years. But yeah, no, just even a year before that, right? Like 50 to 90, that's 100% returns. So sometimes a 5 year can be misleading. We don't want to go just on that. It seems to big enough, like right here, right when it's started to go sideways. So, but anyways, it's still concerning. You would ideally with almost any stock you buy over a 5 year, that's kind of when you want to start seeing returns. And considering, the S&P 500's gone up roughly 100% over that time period, that's not ideal. Although it does pay a higher dividend, right? 2.34%. That isn't a crazy good dividend, but it's also not something that's just terrible either. So factor that in. And also I'm going it over like you have no prior knowledge about this stock, although I'm assuming almost everyone here has at least heard of the company Starbucks, right? So market cap, 110 billion. So this is clearly not a small company. They operate basically nationwide. We'll see a little bit more when we dive into that. But I guess let's dive into some of the factors around this stock now before we get into the description, just because I assume most of you have some baseline understanding that Starbucks sells coffee drinks, fairly expensive coffee drinks, sometimes made fun of. But anyways, so they've been stagnant for a while. They've actually had a huge run up recently from the mid 70s to the mid to low 90s, and that is primarily driven by, I believe it was the Chipotle CEO. That would be really embarrassing if it isn't. Let's just look that up real quick. New CEO. Right. Yes. Brian Nicole, previously of Chipotle. Yes, that is correct. We all know that together now. I was almost certain, but it would be really embarrassing if it wasn't, and then someone in the comments would be like, hey, you got this really wrong, and that's kind of a big thing to get wrong. So, but anyways, they just got a new CEO. Clearly by the jump up and not down, people feel like, oh, that's good. I'm on that. I don't know. So I have the Chipotle stock up here. 1 year, 56%, 5 year, 240% all time. Phenomenal. I don't know how long he was the CEO, but I'm assuming at least a couple years. So Chipotle is clearly a good company. It's got fairly high PE, but that's also because it's growing, and there's not a lot of, you see actually really high inflated PEs in this kind of space, right? Chipotle is really high. Wingstop is very high. Stuff like that. And you'll even see that some in more retails, right? Costco is very high. Everyone, Costco, it's so high. But usually there's not a whole lot, like tech, right? How many tech companies that are growing faster are there? There's a lot, right? But you could always, okay, this is 50, I can pivot. But people want growing companies in these areas, right, that aren't necessarily phenomenal. So there's not 50 other really growing, restaurant stocks you can pick up. There's only a handful. So oftentimes people that are chasing that growth rate pile into a stock that has a high PE. And the only thing you have to factor into that is just, the risk if the economy really goes terribly, which it doesn't even seem like it was affected. It doesn't seem as much because we're freaking, since 2020, it's tripled the price. But it is, that's nearly a 50%, looks like a 40% drop. So do keep that in mind. I don't know what the PE was like around then too, but anyways, this is not a Chipotle thing, but this is to say they have a new CEO. So what are we looking at Starbucks over the next 3 to 5 years with this new CEO? Is he going to be the king that rights the ship? Yeah, we're going to see. So let's dive a little bit more into some of the numbers. I like to use different websites just so I can get a full picture. So, no, I don't want that. I want this. So PE 27, Ford PE. So they're basically projected not a lot of growth going forward, although 27, it clearly jumped up quite a bit. But this isn't a company that's like, oh yeah, we're killing it, right? We're growing quarter after quarter. They've actually missed the last 3 quarters, which is not ideal. Usually one of the things I like to have in my companies is, are they consistently hitting the goals that they are setting, right? We're going to hit this mark. How often do they miss? Now, these misses, this isn't by that much, right? 3 cents, they beat by 9, missed by 3, that's understandable. Missing by 11 is quite a lot, especially when they're only projecting 79, right? That's a miss by like 20%, right? Maybe revenue is fine. We aren't going to dive into the deep financial statements on this. And then this a miss, I guess 3 in a row, like this, they probably missed by not even 1% at that point. So let's say 2 of the last 4 times they missed, 1 substantially. That is, maybe not a red flag, but a yellow flag. Like, okay, some companies, if they beat or hit or barely miss like 9 of the last 10 earnings, when they say, hey, we're going to do good in the future, you can usually trust that, right? And as investors, it's not that big of a deal, other than the fact that if a company constantly misses or overestimates what they are earning, that either shows one of 2 things. Either they're lying to us, they're trying to save face by saying we're going to do better than they think they will and hope they get it, which isn't good. Or they don't know their company well because they think they're going to do good and they just aren't. So this is the future. They project roughly the exact same. Maybe this new CEO will do that. Let's just operate with the assumption this next year that's going to be roughly even. But we can still factor that in and decide, is this a company that is good? I've been very vague with what I think about this company so far. So I'll try and dive a little bit more into what I think. I don't exactly know what I think about Starbucks. Clearly the Chipotle CEO was successful, and clearly it's a similar enough business, right, that it should translate well, the skills there, right? It's quite a dramatic increase for that, 18%, but leadership is very, very, very important. It may be the most important thing other than what the company actually does, right? And how much competitors and all that. And so there's one main risk that I see with Starbucks that makes me hesitant to buy it. And I don't think it's fatal. I don't think it's going to cripple it, but I think it when you look at the floor and the ceiling of a company, tech stocks clearly have a much higher ceiling. Maybe something like Campbell's Soup has a much higher floor, or Procter & Gamble. People are going to need toothpaste no matter how. Toilet paper, toothpaste, deodorant. People are going to need that no matter how bad the economy is, right? That seems like a big tangent, but the point I'm getting at is that I see the competition that Starbucks has, right? Think about it right now. How many different coffee shops do you have in your town that you can think of, right, that do something similar? I'm thinking like the Scooters. I assume that's regional, so maybe you don't. Just expensive drink places. How hard is it to make a good tasting $6 coffee? If you think about it hard enough, and you have the scale and you have the money, it's not that hard to make a $6 drink taste really good. A $6 coffee that's really sugary, that tastes good, that's creative. Now, Starbucks has a really good advantage with that, is they have name brand, right? Who hasn't heard of Starbucks at this point? I doubt anyone clicking on this video has not heard of Starbucks and knows they sell coffee. It's possible. I highly, highly doubt it. I doubt they'd be clicking on this video specifically because my channel has 2 subscribers. But that's beyond the point. The thing with Starbucks is they're going to have so much competition. There's nothing proprietary about having, a coffee. I think that's going to cap the ceiling. I don't necessarily think it's going to cap the floor. However, all that being said, before you flame me in the comment sections, I do like this stock. I do. I say that hesitantly. I'm probably not going to buy it personally. I like to be very upfront. I'm not going to lie to you guys. I probably will not be owning this in the next year. I think there's probably better places to have my money, but I see some things with it I like. The name brand of it, right? And unless it starts shrinking, like, oh, we're closing stores, like, we are not doing it. That's when I start to panic. But I like the dividend. It's a decent dividend. At the very least, it's a stock you can hold that's going to pay a decent dividend, right, until the new CEO gets it going. So I also think for diversification in a dividend portfolio, it probably does pretty well there, right? One that's not particularly, you say, well, 2.34%. If you're holding it, it depends on what kind of dividend portfolio. If you're going for just highest yield, like 7-8% yield, clearly not, right? But if you're going for one that pays a decent dividend, maybe in that 3 to 4% range, but also has some growth with it, matches inflation. Now, over the last 5 years, Starbucks is not a company that you'd want to match inflation because it has not done that. With dividend, it has, but I'm talking about the share growth price, right? So you can maybe put it in there. I know some of the dividend subreddits have been talking about Starbucks, so I guess it's kind of it's more in that camp than the growth, at least right now. But also, 100 billion, that's very large. But there's places in the world that can expand. So I know China's kind of a place they're talking about. But okay, yeah, let's get into some opinions. What do people think? Schwab doesn't like it for the short term. This is a 1-year outlook where they think it'll be in a year or how it'll perform comparatively. So they have in the bottom 25%. So not terrible, but not great. They think the economic moat's wide. See, this is why it's important to do your own research and draw your own conclusions. Because I just argue that they have narrowed to none, right? I hate the 0, 5, 10 scale they have, or even like a 0, 3, 10. I don't like how that's worded. But they think they have a wide economic moat. I don't understand. I want the person to explain that to me, right? Because like they have the name brand, that's great, right? But like I said, there's nothing proprietary about having. I sound like Mr. Wonderful on Shark Tank, but seriously, like there's one Starbucks in my town. There's 2 scooters, right? If it's totally regional, then I just dox myself. But I don't even really care, right? There's so many coffee shops, right, that sell like $6 and not even just that, like kind of like the fast foodie, right? I'm not talking about like a nice coffee shop. Like that's a different category. I understand that, but I disagree with that. Has it as a hold, has it as 4-star rating, long buy, governance. I think it will. So my conclusion is this is not a stock I am personally looking to buy today. This is a stock I'm keeping my eyes on. If it falls, let's just say the hype dies down and it goes back around that 75 range, getting this at 20% discount, closer instead of what, if you take 20% off 20, closer to 20 PE, let's just say, right, instead of 30, because we are closer to 30 than 20 right now. If it was like 21, even 22, 19, 20 range, this looks way more attractive when I've pulled the trigger. I probably would not even start DCAing at this point, but hey, I don't know, and that may just be a boat I miss. However, if you're looking like, I like Starbucks, I want to buy some, I want to hold it 3 to 5 years, I think it's going to perform much better than it has recently. So I'm not saying that's a bad investment. As an investment, I can understand why you would get there. I'm just not quite there yet. I need to see more, It's like when like, I'm a sports guy, so if you like, oh, this player sucks, and then they start playing well, it's like, maybe I'm wrong. Like, I'm halfway there with this stock, right? I'm halfway in between. Yeah, I'm buying. Like, I'm at the point where like I could buy this, but like not where I'm pulling the trigger right now. So personally, that's where I am with Starbucks. I know we just kind of covered some of the base stuff with it. We went over analysts. We went over. I like the dividends. Growth just hasn't been there. And I just think the ceiling's capped on it, but I like the stock. I don't think you're ever going to like lose a bunch of money, right, on this stock. So anyways, if you made it this far, if you liked or didn't like what I did, leave a like, leave a comment, subscribe if you made it this far and enjoyed it. Literally have 2 subscribers at the time of making this video, so I would appreciate a lot if you did enjoy it, if you left a like or a comment or anything. But anyways, I appreciate you for watching, and I'll catch all of you guys next time. See ya.